Hi friends, I am your Joel John. Now I am going to talk about the various kind of terminologies, topics in mutual fund, which will be very useful for the who appear for NISM and other competitive exams. And in NISM books, they will be going by chapter and subdivisions like 1, 1, 1, 1, 2. Here I will be giving it as part 1A, B like that. So now my first topic will be on the concept and rules of mutual funds, advantages and disadvantages for investors, and also the types of fund schemes, which will be covered on part 1B on my upcoming video, because these topics are huge and this is very much descriptive, and also there are a lot of questions and terminology which you have to understand. And to tell about NISM exam, almost only 30% of the questions will be direct, like fill in the blanks kind of things. And apart from that, all the questions, you need to know the concept, you need to know the terminologies. Only then you will be able to understand those, and then you will be able to answer the question. So now getting into the topic, I will first define what a mutual fund is. So mutual fund mobilizes money from investors, invest in different market and security with the investment objective agreed upon. That is, like, mutual fund collects money from many investors, so they have a trust fund which they are going to invest in nothing but equities and that shares, debentures, and other kind of lending related money instruments and commodity markets, so that they will be giving a good return. And then like some of the salient features of mutual funds are coming up. What's the advantage is, like, the common man gets access to market and avails professional fund management services offered by the asset management company. Asset management company will be discussed later, but it's one of the important intermediaries or important person associated with the mutual funds. And mutual funds perform different role, assisting investors to earn and build wealth by investing through mutual funds in markets and securities. Mutual fund structures different kinds of investment objectives, tap a large corpus money from investors with different goals and objectives, say, like it could be for pension, saving for their future, which will overcome inflation. That's something very important. Inflation is the price rise of substances which we consume, and there are a lot of indexes like wholesale pricing index, consumer pricing index, and all those. Consumer pricing index, which will be something, the price rise in what the on the commodities which we purchase by the common man, that's called as consumer pricing index. So those kinds of inflation we will be facing. And children's education, marriage, and also our future requirements like building a house, getting a car, something which requires a copious amount of money. So here the words fund and scheme are used interchangeably. Various categories of schemes are called funds. So various categories of schemes are called as the fund, and the fund will be mostly used to denote the mutual fund company itself. Okay, the scheme offering entity, that's the mutual fund company, will be called as mutual fund, or the fund, which will be which you will be coming across in many speeches. And this mutual funds benefits the government and companies and other entities by investing in their projects, and through the investments they are able to pay for the various expenses. This increases the employment opportunity, and employees in turn purchase goods and services from this company, so which again leads to money circulation. Also the employees pays tax, which benefits the government. So it's a kind of a money flow which is being induced in the economy, so which leads to economic development. And as a large investor, mutual funds checks the operations of the investing company. This is something very advantageous. We can directly invest on shares and debentures, but we won't have that kind of a percentage to influence the management and check their records thoroughly, and also we won't have that kind of a knowledge, which is mainly done on technical analysis as well as fundamental analysis. And these kinds of things are done by the mutual fund company, and also they check for their corporate governance and ethical standards. Mutual fund acts as a market stabilizer by large inflows and outflows from foreign investors, viewed as a key participant in the capital market of any economy, that is any country. The mutual fund schemes have a pre-announced investment objective to mobilize different pools of money. Investors invest in mutual fund schemes which relates to their own need and preference. As I told already, a person who is looking for a pension fund will be staying long, so you will be going with the tax saving fund and children's investment. These are all long term goals. For example, if I want to pay my next year tuition fee, next year fee for my children, but I want have little sum of money, so I want that to grow fast, I can go with the open-ended fund, which is expected to perform very well, but it's risky. Better go with recurring deposit kind of things for that. And another one thing is like mutual fund schemes announces their investment objectives and seeks investments from investors. Schemes may be structured as open-ended, that is, investment is allowed, investment and as well as exit or partial withdrawals are allowed at any point of time. That kind of funds are there. And interval funds, which opens on regular intervals on years, which will be quarterly, half-yearly, yearly, monthly, like that. And the interval there is something called as transaction period and interval period. Transaction period is where when we can buy and sell the mutual fund units, and interval periods are those when the mutual fund will be traded on the stock exchange, which is compulsory in India. And also we have closed-ended funds where the investor can invest only during NFO, that is new fund offer. These things will be repeated throughout the syllabus because these are very important things which every mutual fund distributor, anyone who invests in mutual funds should know about that, so that it really benefits them. And also in exam point of view, lot of questions will be revolving around this, but we cannot expect it to be so direct as one word fill in the blanks kind of thing. And investments are translated into number of units in the scheme, and investors in the scheme are issued units of the scheme. Mostly face value is 10 for all the NFOs, but older NFOs had different face values. Unit capital is the number of units issued by a scheme multiplied by its face value. So unit capital will be total number of units issued by the scheme multiplied by the face value is the capital of the scheme. This will be called as the capital of any scheme. So now getting in to scheme earns, what are the types of earnings a scheme has is, if it's a equity based scheme, it will get income in the form of dividends, and debt funds and corporate funds, gilt edge bond investments and other kind of lending kind of securities will get interest. These are some kind of incomes. And apart from that, another one income is as we talked about these will be listed on the share market as well. So we are going to buy these debentures and securities on share market, which will be traded on the secondary market after the initial public offering. So at that time the price will be varying, ups and downs will be there. So there are something called as valuation losses and gains. Valuation gains, as we understand, if we purchase at a lesser price and sell at a higher price, we are having a valuation gain, which will be called in mutual fund as realized capital gains. This realized capital gains is gain term is given only after the sales. Okay. And so if the valuation loss is something in the graph itself we can see it's down than what we purchased. Valuation gain is something in the graph itself we can see the NAV value is above than what we purchased. So that's kind of valuated is called as valuation gain and loss. And if the loss realizes, then we will be calling it as realized capital losses. So, and apart from this, we have something called as expenses in operating a fund. There will be a lot of charges which we have to pay, and those things which we will go through later. So now to know about the investment profitability, that's what's the profit we are getting, we have to add the interest from the income of dividends and interest from the debentures we have, and that's the interest income we get, and dividend income from the equities, and plus we have to add the realized capital gains, and then we will be going up with the value gains we will be summing up, and we have to subtract the realized capital losses and subtract the realized the valued valuation losses, and then we have to subtract the expenses. So 4 parameters on positive and 3 on negative. That will be like interest income and dividend income are always positive. Valuation gain, it's a gain, so it's positive. And again it's just not realized, something will be realized in between, also they will sell something. Those kinds of things are called as realized capital gains. That's also in property on positive. Other things in realization losses will be there, that will be on negative. Valuation losses has to be in negative, so that with the correct picture we will get. Then expenses we have to definitely subtract from that for any fund. Okay, fine. Then again getting into the topics, true worth of a unit is otherwise called as net asset value, which is called as NAV on most of the times. And NFO is called new fund offering. During NFO, investors buy units at the face value. Post NFO, investors buy units at the price linked to its NAV. NAV is what we will purchase from the mutual fund company. Only in stock market you will go by the NAV price shown there. Okay, and profit or loss belongs to the investor or unit holders. Other entities involved in mutual funds are all paid fees or commission for the works they do. Okay, so still the investor will not lose higher amount than the investor. That is, they won't be asked to pay any kind of higher penalties which the company has to pay. For example, a company does get a huge fine from the government bodies, or it goes bankruptcy and it has to pay a lot of debts to borrowers. Again, those who are good in share market will know we share market investors in India are called as beneficial owners. Only we will be sharing the benefits. We are not even registered owners. Those I will talk when I talk about the share market videos. And so as far as our understanding, we won't be charged for the defaulting companies, their penalties or their losses we won't be taking up. And mutual funds has various options like dividend payout, dividend reinvestment and growth options. The relative size of mutual fund companies is assessed by their asset under management. Here we come across the term AUM, which is the relatively, if you want to compare the size of mutual funds, we will go with the asset under management AUM. Open-ended interval fund funds, or as they have open for investments after NFO, boost the AUM. So as the investments are allowed throughout the plan, or the investments are ongoing, the money flow is there, so this AUM, asset under management, will be increasing as the money flows in. Similarly, also withdrawals will happen. At the time the AU will come down, but again investments will happen. So that's the kind of thing. And for closed-ended funds, so for closed-ended funds, it will be on the based on the price which goes on the stock markets, which is mainly determined by the demand and supply things. And controversially, payouts, dividends, withdrawals leads to fall in AUM. AUM captures the impact of the profitability metrics and flow of unit holders money to or from the scheme. So now we also thought about the AUM. So now let's go into the advantages of mutual funds for investors. So there are about some 10 advantages. I will go one by one. Professional management. So I will first read the topic, then I will explain to you. Investing in line with investment objectives. Investing based on adequate research and ensuring that prudent investment processes are followed. It simplifies the process of investing and holding securities. So what they are trying to come to say that is, in mutual funds you have a fund manager who is going to take up the study and who is going to do a lot of analysis before investing, and also you have something called as diversification. So those kinds of advantages are there. This simplifies the process. So you won't be doing every study. So simply you go select a scheme, select a fund manager, and then you should understand some terminologies, which again the distributor or the person who sells you will help you out. But still you have to also do your own homework. Your money, you have to be taking the whole responsible person, and that's something which is very easy. And another one thing is affordable portfolio diversification. I will just read out first. Investing in units of scheme provide investors the exposure to range of securities in proportion to their holdings in the scheme. Even a small investment give proportionate ownership in a diversified investment portfolio. Diversification helps reduce risk in investments. So what we mainly talk about diversification is there are a lot type of diversification. One is diversifying on various companies, various types of businesses, and that will one business may fall at one time, another business will be going good. And on this companies on the same line of business, some companies will be performing good, whereas some are going down. Similarly, on different things like equity, balance fund, some kind of hybrid funds, EFT funds, everything can be mixed up in a mutual fund. So you get a diversification, and you cannot get that kind of diversification investment. For that you need lakhs and lakhs of money. If you want to buy that kind of diversified, mainly debentures, which are sold at higher price than shares, and also shares which are at higher values. Mostly the mutual funds will invest on shares which give good has a good track record and also has a good balance sheet, those kinds of shares are highly priced in the market. So for us to get ownership on that kind of shares, that too with diversification, will require higher cost. So that's why they called us you are getting affordable portfolio diversification. Economics of scale. Professional management cost related to research office gets spread across investors. High transaction volume gets better terms with brokers, banks and other service providers. This is the third advantage. And here they are trying to say that because we are going to share the price, share the cost, nothing much. So whatever the services offered by the experts, we are all the unit holders are going to share it on the proportionate basis. And similarly the expenses like the the office expenses, the research work cost and missionaries and maintenance blah blah blah, all those expenses are shared upon. So at a very less price we are getting a very high level of service. That's something they are calling about. And liquidity, this is a very important topic. Listen fully, and I am also going to go through my notes because I don't want to miss out anything. This is very important for understanding and exam perspective as well. So for both investors and agents, distributors, whatever you call. So open-ended funds. The investor can return any number of units to the scheme and get equated money, that's price linked to the NAV. This process is called as repurchase. So here you are coming across an open-ended fund. That is something anytime you can invest and anytime you can come out. And the purchase price is going to be linked with the associated with the linked NAV value. And this process we are going to call it as repurchase. So this is something we have to understand. And again we have the interval fund. The same is done here, but there is a transaction period. What is a transaction period? Only in this transaction period you can, like a open-ended fund, you can invest or you can redeem your unit. How with this periods will be, the minimum is 2 days and the maximum they can give is 15 days. And this will be based on the scheme, it will be quarterly, half-yearly or yearly. And those details we will go in much specific later. And also you have to look at the scheme documents on for this. And another one thing which we call it as the closed-ended fund. So I will talk about the interval fund. I will just read it out. The interval fund, the same is done during the transaction period 2 to 15 days on regular specific intervals as per the fund demanding on the objectives of the scheme on other days of the year, which are called as interval period. The interval fund will be compulsorily listed on the stock exchange. This is also an important question. Only listed interval funds, the listing is happening only on the interval period. That's when you cannot redeem the NAV. It will be traded on the share market. Closed-ended fund, compulsory listing in stock exchange is mandatory, but you can purchase it at the price in the stock exchange. You have to find a seller. That's something which is a challenge in equity. The same challenge for direct investors in equities and debentures. The same is here as well in closed-ended funds. Open-ended funds have the highest liquidity. The next will be interval funds, as they have something called as transaction period. The closed-ended funds liquidity depends on the availability of the buyers. That's also there. When there are surplus buyers, they also have a very good liquidity. Okay, and another thing is called as tax deferral. Tax deferral is something which is coming here as the fifth advantage. This is something when you grow or reinvest on a mutual fund, you have some tax saving things like 1010D of the Income Tax Act, and you have the exception from for the taxation of the returns you get. There are certain conditions which are to be specified there, and it should be a tax saving mutual fund which you invest. Be very aware of that. There are mutual funds which are not giving tax saving, so we have to be aware of that. And again, another one thing, the sixth benefit is given as income tax benefit. There is something like 1,50,000 exception on ATC and ATCC for pension plans. So when this kind of investment has some kind of stipulated lock-in period, please read the documents carefully. Always you will be seeing that mutual fund investments are subjected to market risk. Please read the offer documents carefully. Similarly, read the offer document carefully, each and everything. There is something called as SAI, KIM and so on. Those things I will explain later. All those things you have to read carefully and understand all these things. Then another one thing which is called as convenient options. Options offered to, this is the seventh advantage, option offered to structure investments in line with liquidity preference and tax proportion, partial withdrawal of money, investing additional amount to the account, setting up systematic transaction system. So here we know about the partial withdrawal. This is allowed in open funds and during the transaction period in interval funds, and investments of additional amount, again it's only on the open-ended things. And setting up transactions, I will tell a little bit about that. So as you know, within there are a lot of things like equities, debentures investments, and even in one scheme you will have many things. So based on that, within the funds you can transfer some money, and also those kinds of internal changes are called as transactions, which will be done on systematic time. And again, one thing is investment comfort. After you invest first time in the mutual fund, the future investment requires very minimal documents. So the documentation burden is not there, which is the sixth advantage. And the ninth is given as regulatory comfort. That's something, it's a governed one by SEBI. SEBI full form is Securities and Exchange Board of India. I repeat, SEBI full form is Securities and Exchange Board of India, and has strict mandates, checks and balance in the structure of mutual funds, their activities. MF investors benefits from such protection. So this is a protection, as it's a being highly regulated financial body. Another one thing is called a systematic approach on investment. The same thing, there are something called as facilities linked, like systematic investment plans on open-ended funds and interval funds. You can make systematic investments, that you can buy more units. And another one thing is called a systematic withdrawal plan. Again, on open-ended and interval funds, you can set up some price value or some kind of number of units which will be redeemed at that point of time, and the money will be paid to your linked bank account. And also called a systematic transfer fund, to move money between different schemes. As I told you, similarly in the same mutual fund investment you will have different schemes and others. We will get into the details soon. So when you have that kind of things, you will be able to move the money within that. And another one thing is the limitations of mutual funds. When advantages are there, there are also disadvantages which are given as limitations. So with this I will be ending up this section. So please bear with me. It will take something like 30 minutes. I will also have a quick rewind on this. And the limitations, like there are three limitations. One is lack of portfolio customization. So it's like, I will just read it fully. Once a unit holder has brought into the scheme, investment management is left with the fund manager within the broad parameter of the investment objective. Unit holders cannot influence what securities or investment the scheme would invest into. So as there are a lot of unit holders, the fund manager is the one who is ultimately take up the decisions based on the investment objective you have given to him. So based on that, they will make the decision. And also there are a lot of, as we said, there are a lot of schemes within a fund. So within that they will be mobilizing the money, and that's those based on the schemes they will be investing. But you cannot decide, this company you have to invest this much, sir, these debentures you have to buy. That in mutual funds not possible. If you are trading directly on share market, you can do that. But still, I will say that it's a little bit advantageous, because mutual fund managers take a good decision, but it will be common to all men. Okay. And choice overload. Now over 2000 mutual funds are there, offered by some about 47 mutual fund companies, and multiple options within the schemes. Just now we talked about that. You can select the scheme. That's also another one way, if you see, that's advantage. And so try to look at the advantage as well. So it makes a difficult task for the investors to choose between them. So if you look at all my future videos on mutual funds, it's going to be much easier, as you will be aware of the terminologies, but still subjected to market risk. And no control over cost. This is going to be the third limitation. Cost incurred for managing the scheme or shared by all unit holders in proportion of their holdings of units in that scheme. Investors has no control over the cost in a scheme. However, SEBI has imposed certain limits on the expense that can be charged to any scheme. So again, the regulatory body has some limitations on this. This limit again as one of the advantage we saw earlier about mutual fund investments. And now to talk more about this, even the expenses, it's going to be shared, which much cheaper. If you go for a financial advisor or someone, they will charge you much higher than mutual funds for sure. So okay, to wind up with we will just have a quick review on what are all the things we have seen. And I was talking about the mutual fund. What it is, it's just pooling of money from various investments to various investors to get invest in securities and debentures. The advantages are like common man gets access to the market, and diversification of schemes are there. And for government, the economy, it's boosting up the economy through employment, and also very big projects are being funded, and their expenses are able to do that. And they have a control over the companies and corporate governance and ethical standards. As they are a large investor, they hold a decent percentage of shares on the company itself. So MF's share percentage, so they have control over the choice of directors and everything. they stabilize the market, they bring in foreign investments, they have pre-announced investment objectives. And we talked about the interval funds, we talked about the open-ended funds, we talked about the new fund offering, and and also we talked about that interval transaction period could be 2 days to 15 days, and it will be on regular intervals, and these details will be differing from fund to fund. And interval funds and closed-ended funds. Interval funds, there is something called as interval period. That time you cannot do any transaction, that you cannot sell the NAV and redeem the money from the mutual fund. At that time it should be mandatorily listed on the stock exchange. And closed-ended funds, definitely after, only during post NFO you can directly buy the units. After that you can sell it only on the stock exchange. And both interval funds and open funds mandatory to list in stock market. And another one thing we are going about is, most of the face value are now going to be 10, and we also talk about the unit capital. And capital of a scheme is the total number of units issued multiplied by the face value. And we talked about scheme earnings, which are like invested money we get from debentures, we get some kind of interest, and from shares we are getting something called as dividends. Apart from that, we have the valuation gains, we have the realized capital gains, which is already sold at a profit. The profit is called as realized capital gains. And valuation losses are something where the value quotes lower than what we purchased, and realized losses are something when we sell it at a lesser price, and expenses are there on that. So profitability is calculated by 4 profitable parameters, like the interest we get and the dividends income we get. This will be always in positive, and gains happen only when the purchase price is lesser than the selling price. So valuation gain is something which is plotted on the graph, which we haven't sold, so it's just a value. And then we have something called as realized capital gains, which we have sold and the profit is being added to the fund. And then we have valuation losses, which is going to be subtracted, that's the unrealized losses. And then we have the realized losses, which we sold at a loss to avoid future, still if it goes down, that's the kind of opinion, they sell it. And the expenses we have to subtract. So these are some points I just thought of refreshing soon. And apart from that, you have the net asset value concept. The true worth of units is called as net asset value, that's NAV. And you have the new fund offer, and during the new fund offer period only you can invest, and after that post NFOs you can purchase them only at the NAV price. And the profitability of the investors and all those other things we have gone through now. So mutual funds you will be thorough with, and I hope this video will be useful. And subscribe to my channel, press the subscribe button, press the bell icon. I am going to as you would have seen the videos on my channel, as till now I have posted about some 25 videos. All of them will have different themes. That's something is a motive of my channel. It's an educational oriented channel for true, and we are trying to be educative on all the aspects: common knowledge, general knowledge, behavioral science. So I will be posting videos on different topics. So if you click the subscribe and bell icon, what happens is, whenever I post a video, it will show on the activity bell. So whenever you click and see if the topic is relevant, you can see also see videos which you don't found relevant to your topic, because that will be also much helpful for you to understand much about the society. And also lot of things will be relevant to you. Like next I am also planning to talk about communication skill, presentation skills, and so many other parameters, and also general topics like birds, animals. Already I have covered snakes, crocodiles and tortoise and some of the Adayar snake park I went and took some videos, and Mandalur Zoo I am planning to visit soon. And also general topics will be added up. Apart from that, you can also, I think I try to communicate clearly, but for time consumption I am little bit overspeeded. So another one advice I like to give is, even if you are going to write the exam, don't listen to this audio when you are driving. If you are not driving, you can always use your travel time listening to something like this, which will benefit you. And also read the books. Just listening alone won't help you, because you have to memorize all the terminologies, then only you can answer the concept oriented questions, which will be twisted. And I will also go through some of the question paper after finishing this chapter. I think for covering this itself I have to make some 20-25 videos to cover the NISM syllabus. And also I have told I will be doing the same thing for life insurance and general insurance. And general insurance exam I have to write still, so that also I will be covering soon. Anyhow, thank you very much for your time. Subscribe to my channel, like, share with your friends, comment, and share it on other social medias. It's time to say goodbye. It's Joel John J signing off from you. Bye.